Small caps led the charge of a broad stock market advance on Friday as indices made record highs. However, many growth stocks got left behind. The Nasdaq climbed 2.1% for the week, and it was the third straight week of gains for the Nasdaq. The S&P 500 climbed 1.7%, its second consecutive up week. And the Dow Jones Industrial Average also rose and was able to remain above 30,000. Back to the small caps as the Russell 2000 rallied 2.3% to an all-time high. In other news, but not really, the U.S. economy added 245,000 jobs in November, and the unemployment rate fell to 6.7%. Those pretending to be economists had predicted a gain of about 440,000 jobs. With a surge in coronavirus cases, the employment figure represents the fifth straight monthly decline. And of course, the market reaction on Friday shows that investors have been looking through this toward a policy response. In other words, investors are looking for more money printing, or they are just hoping to find more greater fools to hand off their winnings to. And that's why I did a bit of selling this week. Now, who has been watching interest rates? From the bottom in March, when the 10-year yield fell below the 0.5% level, we're now back to the near full percent level. That's a double in under a year. And if you believe the surge in cyclical stocks, rates should go higher. And from what I see, that will happen. Interest rates may have a pause here, but next year has the potential to be much more interesting than this year. So keep that on your calendar. All right, let's take a look at the charts. First, taking a look at this chart, which extends from the previous video. On that previous video, I had 21 views, which meant there was one person that saw that video because I watched it 20 times. Now, this chart here shows a stock market rally off of the March low. You can see that investors flooded into risk assets. And as compared with historical monster rallies, the past 10 months have been unprecedented. The quickest bear market of all time has led to the greatest Wall Street rally of all time. At this point in time, if you want to rush into this rally, be my guest. I'll hold the door for you, but I'm going to stay outside. Okay, let's go to our charts. We've spent so much time with the SPY that I thought we'd switch up and take a look at the iShares Russell 2000 ETF, which is a proxy for the Russell 2000, and the symbol is IWM. And as you can see here, from the March low all the way up here, that's been a monster rally. Now from about this midpoint here to the top here, that's the rotation into small caps, as well a rotation into the cyclicals, and that's why the Nasdaq has been stunted. Let's move on down here into volume. Looks fine. No complaints there. Into the MAC, we can see the bottom and basing here with the fast line heading on up pretty quickly. We're at a 4.741 level on that, and that's pretty strong. Moving here into the MAC histogram, you can see how strong that is in comparison to everything else on this 20-year chart. Moving down here into price rate of change, same thing. Nice move down here, bottom basing, and on up. Into the relative strength index, you can see the same slingshot here, on up. Very strong, very nice. Now, as opposed to the other indices, the Russell has been able to break through that downward trend line. It's interesting that neither the Nasdaq, the Dow, or the S&P shows a relative strength index moving through that downward trend line, and so that still is an unfavorable condition. We got to watch that, but the rotation into the Russell and cyclicals helped make this RSI move, and fairly strongly. Down here into the stochastics, same thing. Nice bottoming and basing above that 50 line or midline. That's what makes it stronger all the way back here. Continuing on up. Into the Williams, pretty much the same thing. We're into that overbought territory and we'll probably hang there for a while. Back on up here into the price chart. One last look. Now, even though the Russell has screamed all the way up to its current level, that doesn't mean the other indices are going to do the same. So there's still cautionary flags with that RSI unable to break through that downward trend line. So be cautious, be careful, be prudent. And for today, that's ChewDog Charts. Thank you.